Hello traders and welcome to my channel. In today's video, we are diving into the world of Forex trading, what it is, how it works, and why it's one of the largest markets in the world. If you have ever traveled internationally or heard about currency exchange rates, you have already interacted with the foreign exchange market, or as we call it, Forex. So what exactly is Forex trading? Well, at its core, Forex trading is the process of buying and selling currencies with the aim of making a profit. The Forex market is the largest and most liquid financial market in the world, with a daily trading volume of over $6.6 trillion. That's more than all the stock markets in the world combined. In Forex, currencies are traded in pairs. This means you are simultaneously buying one currency while selling another. For example, a common currency pair is Euro USD. If you think the euro is going to strengthen against the US dollar, you'd buy the euro and sell the dollar. On the flip side, if you think the dollar will strengthen, you'd sell the euro and buy the dollar. Now, the Forex market is unique in that it operates 24 hours a day, 5 days a week. This is possible because trading is conducted across major financial hubs like London, New York, Tokyo, and Sydney. As one market closes, another opens, allowing for continuous trading activity around the clock. You might be wondering how Forex trading differs from the stock market trading. While the stock market involves buying and selling shares of companies, Forex trading focuses only on currencies. Another key difference is size. As we mentioned earlier, the Forex market, it exceeds the stock market in daily trading volume. Unlike stock markets, where trading hours are more limited, the global nature of Forex means it's always open somewhere. But who are the key players in Forex market? Well, there are four main types: governments, central banks, multinational corporations, and retail traders like you and me. Governments and central banks influence the market through monetary policy and interest rates. Corporations use Forex to hedge against currency fluctuations in international business. And finally, retail traders participate with the goal of profiting from these fluctuations. Unlike other financial markets, Forex offers traders a chance to profit in both rising and falling markets. This is because you can always take a position to either buy or sell a currency pair, depending on how you expect the market to move. So, to sum it up, Forex trading is all about the exchange of currencies in a global marketplace that never sleeps. It is a fast-paced and exciting market with governments, corporations, and individuals all playing their part. If you are looking to explore the world of Forex trading further, make sure to hit that subscribe button and stay tuned for more in-depth tutorials. I'll see you in the next one.